very well versed in macro, very well versed in Bitcoin. Welcome, Noah. It's good to see you.
Let's talk about it. Let's see what's going on in these crazy markets.
I've heard a couple of people say that he's essentially got this infinite money machine that he's created. How the hell is he doing it at the moment?
It's a meme token that has a story behind it. And the story is that he's basically has a capacity to bring forward money, future money, to the present. So the point is,
how does this all tie in with presidential election, a pro-Bitcoin president?
Let's try and keep it as simple as possible. The global financial system is prepared to self-destruct every second of every day.
Blockmates Orange is sponsored by Core Network, the ultimate Bitcoin-powered EVM-compatible blockchain. Learn more about Core at blockmates.com.
Welcome back, everyone. Another episode of a Blockmates Orange. A good friend, long-time friend, one of the best thinkers, great thinkers in the space. Nothing is one-dimensional with Noah. Those of you who do not know who Captain Rational is, get out there and find out. Very well versed in macro, very well versed in Bitcoin. He is a Bitcoin maximalist. Sometimes you wouldn't think so, but he is. He recognizes the value of money and, more importantly, allowing money to work for you. Welcome, Noah. It's good to see you. It's good to have you on. It's
Always
been a while,
pleasure.
brother. How are you?
Yeah, it's always good to talk about these things. There's so much has changed, but nothing has changed. But let's talk about it. Let's see what's going on in these crazy markets.
Today's podcast is sponsored by Glyph. Glyph is a non-custodial decentralized exchange operating on the Core Network. As you know, we've spent a lot of time focusing on Bitcoin DeFi on this podcast, and essentially what Glyph is doing is replicating what Uniswap has done on Ethereum. So they are obviously dedicated in developing a sustainable and innovative DEX on top of Bitcoin, much like Uniswap, and just taking this whole Bitcoin narrative to the next level. So they've got a unique non-custodial approach which allows users to retain ownership of their Bitcoin while enjoying the benefits of a decentralized exchange experience. Their website is glyph.exchange, and you can go and trade a variety of assets there like BTC, USDT, USDC, and a lot more. Go check them out. Yeah, I wanted to just bring you in and just chat about, obviously, Blockmates Orange is very much, it's about Bitcoin. It's about kind of like the value proposition that Bitcoin brings to the table. And, we've spoken a lot about Bitcoin DeFi and, the value of the lessons that were learned kind of like on the EVM and Ethereum, yields, lending, borrowing. We've transcended Bitcoin from essentially just a savings account now. Now people are talking about collateralizing and using Bitcoin as a tool to do all the things that Ethereum was being used now. Bitcoin. How do you feel about that just in general? Do you think it's a good idea? I know that a lot of Bitcoin maxis kind of like hold their Bitcoin very close to their chest. They don't want to let go of it. Do you think there's an environment for this kind of thing?
Folks rightfully do not want to give up their Bitcoin, nor that is the appropriate perspective to have on the substance, the digital substance. But the concept of a financial system isn't just money, it's credit. So obviously, we've gotten into a world where credit has become perverse, but the concept of credit is fundamental to a functional financial system because it facilitates entrepreneurship, the lending and borrowing of capital with an associated interest rate. It doesn't have to be perverted, which we don't have to be considerate or uh, talking about the current state of affairs. But if I'm a student and I'm graduating and I got a good idea, so someone's going to probably want to lend me money. They're going to want an interest rate so I could do some sort of entrepreneurial activity. So the question becomes how to take that money and use it in a credit arrangement. So there's ways, uh, so that is undeniable. There's no way around that. So uh, while folks could want to hold on to their Bitcoin, the future must use that Bitcoin in credit arrangements in some way, shape, or form.
Thoughts around what Michael Saylor is doing. But firstly, before before we get into what Michael Saylor is doing, can you break it down into how he's doing it? Because I've heard a couple of people say that he's essentially got this infinite money machine that he's created. How the hell is he doing it at the moment? Can you break it down for us in kind of like idiot terms so that we can understand? Because right now, the way that I see it is it's like it looks cool, but how
Yes.
risky is it, and what exactly is he doing?
Well, obviously the MicroStrategy token, quote unquote, the boomer token, is just that. It's a meme token that has a story behind it, and obviously that story is tied to financial activity. So it's not just empty to the degree that memes are in crypto space, but it has infinite supply. But the story is that he's basically has a capacity to bring forward money, future money to the present. That's the capacity to raise debt or to issue debt, and people buy it. So people are buying it, and that's allowing the mechanic to play out where that capital raise uh, that is funneled into the acquisition of additional Bitcoin that floods the balance sheet, which increases the value of the company and the total Bitcoin per share, even considering the dilution. So it does have overtones of this is going to keep on going, which does it should give folks some pause, but in the context of good money crowds out bad money, I would say it probably gives or should give less pause. And it's like, all right, this makes sense. Bitcoin is quality money compared to uh, basically what the dollar is. It's a hard statement to make because the dollar isn't the dollar. It's credit, and what is the dollar is a long story. So the point is, I think it is a decent, reasonable strategy. He's executing probably financial uh, persons with different degrees of financial professionalism may say otherwise, but to me, it makes sense. It's just raising capital. He's pulling future money to the present and growing the strength and depth of the balance sheet.
So he refers to it as being property. I mean, he's always, well, not always, but I think quite soon into his narrative, he referred to Bitcoin as property, right? So,
Mhm.
in many ways, the way that I'm perceiving this at the moment, having had a background in property myself, is that he's obviously using Bitcoin as property collateral in the same way that you'd use a high rise building with, a 20-year lease. He's doing the exact same thing, and he's obviously raising funds off a collateral base in order to be able to buy more Bitcoin. And if essentially he's creating a loop. The question is, coming back to what I asked originally, is how risky is this? And I mean, a lot of people have said, listen, if the last cycle didn't rinse him, nothing will ever rinse him in light of what happened with FTX. But what is the worst case scenario that could possibly play out for MicroStrategy? Because right now, with the amount of Bitcoin that he has, if he hits a brick wall, I mean, I don't know whether we'll recover anytime soon from, you know, a liquidation event of that nature.
Well, why is he a forced seller? Does he have any leverage? To my understanding, I don't think he has any leverage.
No,
And to my
no.
understanding, there's no coupons on his convertible note. So he literally has zero debt interest payments. So the convertible note, probably the mechanics I don't entirely understand, but so people are buying it because they want the future, they want exposure to the future beta that MicroStrategy, the Boomer token, offers that'll grow at a faster rate than Bitcoin itself, and they want to convert. So when Bitcoin goes 5x, MicroStrategy Boomer token goes 7, 8x. And that's the whole point of the convertible note. Um, how does that play out uh, if if um, if the folks don't want to convert? Like if Bitcoin doesn't appreciate, but that's speculative. I think we'll consider that scenario in the future when and if that occurs. But for now, the strategy he is executing is that Bitcoin will just go up. And in most regards, the central banks tend to think that's going to be the case. I think the ECB did
Yeah.
say, what are we going to do if the base case is Bitcoin just keeps going up, because they just keep debasing to compensate for the deterioration of demographics. So there's no way that doesn't occur. So we could you play the market and you make decisions based on what is, speculating on what may be, and that's has to be
Mm.
risk considerate. So right now, I would say the risk is to not be exposed to the current condition, rather than being fearful of these potential scenarios, negative scenarios we're considering. Which is interesting
Okay,
because the
I do
risk is
agree with
not
that.
being exposed. You got to own this stuff.
Yeah, absolutely. Yeah. I mean, imagine not being exposed to any kind of risk at this point in the whole trajectory of what this market is doing right now. So let's go to a more general kind of like perspective on things. We've obviously had an election that was very much, it landed up becoming very much a Bitcoin election. Unfortunately, fortunately, depending on which side you sit. I think unfortunately, because I think it needs to be a bipartisan issue, but it wasn't. In many ways, it kind of like ignited a market that was very, very much stuck in a range that drove everyone mad. Um, I know that you rationalize it like you do, hence Captain Rational, and you've spoken about it many times. But obviously, this kind of like lit a stick of dynamite under the market, and we've had quite an interesting month since obviously the results of the election. How does this all tie in with presidential election, a pro Bitcoin president, but then on the macro side of things, are there catalysts there that are obviously encouraging what's happening? Is it kind of like this, almost like this domino effect, or do you think the macro has still got issues and is still potentially like an issue going in after the inauguration?
Let's try and keep it as simple as possible. The global financial system is prepared to self-destruct every second of every day, likely to such a degree that they. So just keep it simple, right? Just so that is something to be cognizant of, and it's likely to such a
Yeah.
degree that they won't be able to intervene. Like no matter what the intervention is, they cannot intervene and stop the deflationary cascade. That's just real. And that's what everyone talks about in some way, shape, or form. And they say, oh, the bear market's coming in 2026. No, the whole damn thing could blow up today. And if it
Mhm.
blows up the way 250 trill in notional, if something blows up where 50 trill is needed, that doesn't exist. Like that's the whole point of the dollar system in its current form is there isn't enough dollars in existence to pay the amount of dollar debt that is owed. Therefore, the system cannot deflate to its natural state. Would just everything would just they wouldn't be. It's like in 2008, they wouldn't be able to find the bottom, and it would just be like in complete chaos. Okay, so where are we? um, it's like Hard Rock Nick. May he rest in peace.
Yeah.
It's like where are we and where are you? Or his favorite catchphrase. So where are
Yeah. Where
we
am I and
considering?
where are you?
Where
Yeah.
am I? So
Yeah.
I'm in the mindset that yes, everything can collapse literally today. So, but it's not right now. So the requirement is therefore very simple: own more assets, and then the equation is even simpler: what assets? It's not going to be boom or meme coins on equity indices. Uh, the crowding of capital into boomer meme coins due to a lack of financial astuteness, just the capacity to understand how It's not just the system from like an equity standpoint, like how that system works, and capital raises for corporations and equity dilution and they're raising money and doing reverse splits. That's just like baby back financials. Uh, but what is the concept of money? What is money? What do central banks do? How does the system at large manage financial incentives? Actually encourage people to be productive. So that is what's points everything to the crypto markets. And this is like what Raul talks about. It's the only trade. There's only one trade, and the trade is to own the systems that that print money. I mean, it literally prints money. That's what these products do in these crypto markets. That's what a collateralized debt position is. That's what credit is, because you have to understand what the dollar is and how the dollar works, and understand what these little micro protocols are running around at like 200-300 mil, $400 million market cap, but they're banks. So what does that leave us? Let's tie it back to the original thought. If everything could collapse today, and it's not, that means we got to own the shit that is most likely to be like wow in the future. And what does wow mean? Wow means the banks are pretty shitty. They're old. Nobody knows how they work. You can't buy them. You can't own them. You could buy Boomer meme coin tokens, Citibank, Chase, HSBC tokens on the stock market. It's just a meme coin. You don't own shit. You don't own anything. But in these crypto markets, when you own a bank, you literally get something. You have a capacity to vote where it has an effect, or you optimally have a capacity to vote where they actually pay you for your votes. That's crazy. So this changes everything. It just fundamentally changes everything with regard to investing. So if this stuff changes everything with regard to what is investable, what do you get for your investment, then the potential capital rotation from boomer meme coin tokens to these types of investments is extraordinary. Uh, I don't even, I don't want to put numbers on it, but people look at, um, dividend type of investing methodology in the stock market, and they're like, what's the balance sheet? Is it healthy? Is it in the red or in the green? How much debt do they have? When you do this to these crypto markets, if the big money ever did it to these crypto markets, the repricing of these assets, people are beyond underexposed. The numbers would be mind-boggling. I can't even put numbers on it. 10,000, 100,000, 1,000,000%. I mean, these companies in the crypto markets have zero debt, zero real estate burden, zero OpEx, zero CapEx. It's zero across the board. Yet they're producing $50, $100 million a year in revenue. And 4 years ago, they were producing zero. And some of these companies have billions of dollars in deposits. 4 years ago, it was zero. So what would a company that has billions of dollars worth of deposits and a couple $100 million a year in revenue be worth in boomer meme coin land? That is probably where we need to think where the pricing is heading. Anyway, so catalyst with the election and macro. I'm generally in the super cycle camp right now, where the situation for the dollar, the situation for global debt, Lynn Alden, nothing stopped this train. Super cycle basically implies higher lows, higher highs on interest rates, which means everyone is screwed in some way, shape, or form at some point. And I expect a significant monetary inflation, which means basically risk assets go through the stratosphere, which includes boomer meme coin tokens, except I think this is going to be a massive rotation of capital to these crypto markets because they're so remarkably investable. They just offer so much. And then to top it all off, folks are talking about a national Bitcoin reserve. And the tax policy that's being floated, and the Fifth Circuit that just rejected the tornado cash position. Oh, I
Yeah.
there's almost no words for what's going on. It's in, I mean,
It
literally just,
is
yeah.
it is actually ironic and obvious that I would ask you to come on at a time like right now. So um, let's rewind 4 years ago, right? So 4 years ago, we had probably like the most significant realization around the potential of what DeFi had to offer us. Even though you could argue that the starting point was DeFi summer, I think it only really happened kind of like 12 months later, where we actually like, and you were a big ambassador and an advocate to buy something that can basically pay your salary. It's something that will always stick with me, and it's probably the most valuable lesson that anyone has ever taught me in this space. And you were the one that coined that phrase. And I mean, it's so obvious, but that's what you did, right? And it's like we've now arrived at a point where one-dimensional Bitcoin is no longer one-dimensional. It's not what it was when it started and the white paper as a peer-to-peer payment network, because that's what it is in essence, but it's grown into something more, and we've taken it and it's metamorphosized into this treasury, this savings account, this instrument that basically captures value and preserves it in a way that we've never possibly seen. Maybe gold did it for a long time, but I think that train has maybe sailed, or should I say that ship has sailed as opposed to the train. We now have this ability to capture the value in a digital format where we can lend and borrow off the back of it. We can collateralize it. I don't know if you're aware of this, but on the core DAO network, there's a mechanism and there's code within Bitcoin which allows you to not actually hand over custody to somebody else. So you can lock your Bitcoin over, you can actually nominate how long you lock that Bitcoin. It can't be bought, well, it can't be sold. You can't move it around, but you still retain custody over the time period that you choose to essentially lock it. And it can actually stand as collateral in order to be able to either lend, borrow, stake, and earn yield off the back of it. If we take the Ethereum network at $350 billion, right? And we say that all this opportunity was created in the last DeFi cycle that we had. What does this look like potentially for a 2 trillion, 3, 4, 5, $17 trillion asset, and the ability for you and I to be able to leverage if we choose to, or just simply stake and earn yield in the same principles that we had on DeFi? Pardon me for the long-winded delivery on this, but I think I needed to create or paint the picture of how significant this whole thing is in terms of where we are potentially going. And this is a crystal ball moment. And I'd like you to kind of relay that or relate to that and tell us what your thoughts are as to where this potentially can go.
There's a Bit VM, or the Bit OS, and you got Bob, and you got Rolux, and you got Merlin, and how
Yes.
many Bitcoin L2s, and Botanics, and the alternative Bitcoin L2s, and so anything that comes out of pure Bitcoin, which is basically UTXOs, it's it doesn't. So the Bitcoin network has a capacity to execute a stack of operations, not Turing complete. So no matter what, it's going to be limited compared to an EVM type of application. So great. So we have a capacity in the future, if not now to a degree, for Bitcoin to be locked. That I know. Bitcoin 1.0 had a lock component, which is not talked about. That's something I talk about in DeFi as the greatest innovation of financials in like ever. The capacity to
Ever.
um, immutably and deterministically, like you could prove to anyone in the world that this capital is illiquid. That's crazy. That doesn't exist in traditional finance. Okay, so then you have an escrow contract with, BitOS or whatnot, or so you have the basics of credit primitives, And that's big, but there's bigger. And that's where the full application suites, what that allows. And so there's different levels, different degrees, and the way that translates to the financials is risk. So there'll be a certain interest rate associated with credit at the Bitcoin level using those types of applications. There'll be a different interest rate associated with credit on the Bitcoin L2s, and then there'll be a different interest rate on EVM and wrap implementations of Bitcoin. So all that is a risk curve of how much people need to be compensated in order to put their Bitcoin in a particular situation with a different degree of risk. The I as I said earlier, I'm in the super cycle camp for a variety of reasons that I started hinting at. The potential, I can't even put words on it. We're talking about the demonetization of so much garbage in traditional finance and all these counterparties and intermediaries and people sitting at desks of 90% empty office space, of all this useless waste and inefficiency replaced with a contract that the US government just said isn't what's the terminologies they use? It's not even, there's no responsible party. It's an entity basically unto itself. So that comes back to what I've been talking about, the deterministic immutable contract, along with the capacity to lock capital, changes everything with regard to financials.
Yeah, I mean, it is in many ways the brave new world that I think even Satoshi would never have expected. I mean, it was kind of like it was always based on value, but now the value is transferring into practicality, into I mean, I still love this whole idea. And then this at this point it's become fact that Bitcoin is equivalent to property. I know that you and I were kind of like commenting at some point in the last 12 months around how you've got these high-rise buildings in big cities, not just in the US, but around the world, that don't have tenancy. COVID was kind of like the real kind of reality check. And, people started realizing that, hold on a second, like value needs to reside elsewhere. And now we've arrived at a point where crypto is, I think, probably for the first time ever in its entire history, where the penny is starting to drop and people are starting to realize, hold on a second, this thing is a tool that can really change things, hopefully for the better. That still needs to be determined. But based on the possibilities that, I mean, you've just so eloquently demonstrated, that's exactly what's going on, right?
Unquestionably. It takes, so unfortunately, consistent with robotics and AI, this type of technology, immutable deterministic contracts, removes the problem from the equation. And the problem in the equation is the human. So when you want to fix human resources, how do you fix it? You get the human out of human resources, and you got a system that's actually going to work reliably, consistently, dependently, with resiliency. So, so that's real, and that brings up very existential questions about where the hell we're moving as a species, and whether Terminator was actually a a biography, a historical novel. Um, I had a thought. Oh, just one thought. Property,
Yeah.
semantics, the meaning of words. Property is a fascinating word. Security, commodity, uh, capital is another word. So I've gotten obviously deep into like legal terminologies, and I've spent a fair amount of time. I'm not going to digress too much into that, but it's a very interesting subject. Um, what all of those terminologies mean or come together to allow us to say about Bitcoin and everything else, it's not it's not a money as defined by government, which has massive implications with regard to tax policy. And I ain't talking like laws going back like hundreds and hundreds of years, like back to British common law. So that's just fascinating. But I define it as a money. Uh, it's the best money, but you definitely need you know you need liabilities of Bitcoin. I think that's a very important technological puzzle piece. So eBTC is quite interesting in that regard. Just a pure synthetic type of Bitcoin. So there's a lot of unknowns about where we're heading, but there's some core. The biggest thing to take away from the traditional financial system is the shit that's necessary for an actual financial system. So what is a financial system? It comes down to what money does. And I'll end this thought on this note. Money um, uh, incentivizes productivity. So that's what a salary is. It actually gets you out of bed and encourages you to go to work because you want to live because you got to buy food and pay bills. So it's an incentivizer of productivity. It rations natural resources. So there's only X amount of eggs on the shelf, and if there's 20 people looking for them, and there's only a couple of cartons, those prices go up. So that's results in like in consumer price inflation and stuff like that. So money is a tool that rations natural resources. And what's the third thing I always say? Rations natural resources, incentivizes productivity, and anyway, I'll end on that. Those are my 2 points about money. So bear in mind, I don't think, and who's still in the camp of we're going to spend Bitcoin? I don't think many folks. I'd rather
Exactly.
spend.
So no, no, I don't think that's even a consideration anymore. It's kind of like, and even though I understand the ethos and the premise behind it, I think we need to transcend that, and perhaps that is maybe the next stage in this whole thing, where you have the collateralized value of Bitcoin, and it has to be recognized as that, and that is used as a means to actually use another currency, whether it's the US dollar. I don't know what that is, because are we naive or are we wise to think that the US dollar is going to cease to exist in the next 10 years? I don't think so. I think it's going to be around in the next 10 years. Maybe it won't be around in the next 20 or 30, but we still have to spend something in order to get what it is that we want if we hold Bitcoin. Because I've spoken to a number of people where they say, well, Bitcoin is a savings account, and I completely respect that perspective, and I agree. But how useful is it if you can't spend it? And if you want to spend it, in what form do you spend it? I think that's the question.
Great questions. I'll make a point about like the dollar. It's very important to understand the dollar, to understand Bitcoin. So it's not about reserve currency. It's about what people use for medium of exchange. Because if you have Bitcoin, you don't want to spend Bitcoin. You want to borrow $5 against your Bitcoin and spend the medium of exchange. And it doesn't really matter what the damn medium of exchange is. It could be dollars, pounds, euros, yen. It doesn't matter. You just want to borrow some worthless euros against your pristine Bitcoin. So, but the dollar is going nowhere. And it's not about reserve, like what countries are holding in reserve. It's about what countries have what debts. And people don't understand a lot about the dollar. I'll try to keep a couple of brief statements. Some of the broad strokes. The U.S. has 36 trillion debt. The U.S. has printed a tiny percentage of the amount of dollars in existence, and that's the 36 trillion. The vast majority of dollars were printed outside the U.S. Some 270 plus trillion dollars not printed by the United States, printed outside of the United States by the Eurodollar banking system. So that's one thing that's not understood. Two, for the dollar to not be the reserve currency or the most popular medium of exchange, the debts need to be paid off because otherwise people need to buy dollars to pay their debts. Therefore, if they're buying dollars, that's propping up the value. So, first fact, there isn't enough dollars in existence to pay off the debts. So it is mathematically impossible for the dollar to be the not have this value it has on forex markets, like DXY and whatnot. It can't go down. There's not enough dollars in existence to pay off the debts. Um, and
Mm,
that props up the value of the dollar basically, unless there's intervention by the person who issues the dollar, which is the United States. So don't look to how much is in reserve, how much is in savings. It'll get into trouble, as Luke Gromen talks about. Balance of payments, and China's going to have, there's like how much dollar denominated shit outside the U.S. that foreigners could sell, and that causes all sorts of havoc. But in the end, this is the most important thing to understand about the dollar. It's not another country choosing to repay like the US. It's when Australia owes China dollars because China lent Australia dollars, or Singapore lent Malaysia dollars. Everyone on this planet owes someone else, not their currency, dollars. So what
perfect.
happens when Australia uh, owes China dollars? China's like, no, pay me the damn dollars. No, you're not paying me in gold. I want the damn dollars because I owe someone else those dollars. Because if you give me gold, I got to go buy dollars. No, give me the damn dollars. So it's not. It's the equation does not compute that dollars go away anytime soon. Hope that simplifies things.
I think it does very, very much so. Current financial system, traditional finance, we've got obviously one of the huge success stories for Bitcoin, whether you like it or not, has been the arrival of the institutions in the form of BlackRock. I mean, realistically, BlackRock runs everything. I mean, they have ownership in pretty much everything that is of any significance, not only in the US but around the world. They're obviously very interested in Bitcoin. I think they're the biggest owner of Bitcoin right now, besides Satoshi, if I'm not mistaken. Yeah.
From an ETF standpoint, but
Um,
so it's not their money, but
yeah,
yes.
from an ETF. No, it's not. But they are the holders. They are responsible. They are the custodians, directly and indirectly. So, what does the ramification of the traditional finance system, governments, treasuries attributed to governments and corporations, how do you think that will influence the trajectory of where Bitcoin does, in light of the fact that at the very essence of why Bitcoin was created was to mitigate and to, in many ways, direct the attention away from these entities that have caused these problems and give that power essentially to the people? Or am I being naive in thinking that that's what it's all about, and what is will be,
Yeah.
and Bitcoin just needs to take that course?
Now, don't get lost too much in what everyone wishes to be. We have hopes and dreams for the future, but what matters is, especially with regard to capital management, what is today. And there's complexities. There's centralization of mining. It's not as decentralized as folks like with regard to the mining pools. It's just like
Yeah.
the validator set and the consensus clients with Ethereum. It's not as decentralized as people would like. So there's attack vectors everywhere. This plays into the whole damn thing could fall apart if enough things go wrong in a single hour of a single day. Um,
Mhm.
so Willie Woo made an interesting couple of thoughts probably in the last year about like infinite Bitcoin because of the stock market and options and all the derivative products that have come online. And I think he understands it maybe better than many folks, including myself, obviously. Um, and that is what is. That's real. It's not. We never hoped for that. We never wanted that. We never wanted ordinals and runes and all this stuff to come onto the Bitcoin network, but they exist. I've learned a long time ago, serenity now. Do not fight what exists. Do not fight things that you cannot control, because all that does is result in anxiety and frustration. So be in control of the things you can control, and understand the things that you can and both cannot control. Just understand everything. So no matter what we wanted for Bitcoin, it's irrelevant. And BlackRock, there's no voting rights associated with owning Bitcoin. It means nothing. It's not like they're hoarding like 10% of the Ethereum supply and they could vote on a major proposal. So it doesn't really mean much in that regard, I guess. And they can't dump it because then that would be illegal. That's not what an ETF does. So, you
Yeah.
know, listen, they're just Bitcoin number go up. It's just what it's going to be. That's the biggest
Yeah, I mean
takeaway.
that is this. Yeah, just I want you to define what you believe is, in simple terms, a super cycle. When you say
Mhm.
I'm someone who believes in this, what does that actually mean?
Higher lows, higher highs. And most interestingly, higher, significantly higher lows. Higher highs is dependent on capital rotation. That
Yes.
depends on the demonetization of other assets, which I think will accelerate as well, because this asset class is likely being more and more observed as better investments. Elimination of counterparty risk, elimination of just hierarchy of expenses, of debt. There's no debt. There's no debt. That's insane. The most investable asset class, just because of that alone. Um, so a super cycle probably means both, um, significantly higher lows and potentially significantly higher highs. Whether there's diminishing returns on Bitcoin, and I don't think so. I think we probably see maybe a deviation from that trend of diminishing returns as the narrative further solidifies that everything else is shit compared to this stuff, shit investments. And Bitcoin's a great collateral, and the fact that you would literally now have a risk curve for how to collateralize it. You could collateralize it on a very Bitcoin-centric network, which has limited capacity compared to the significant derivative capacity of like an EVM network with an increased risk exposure. Therefore, there's likely increased rates of return and increased interest rates, and that's the whole point. That's a risk curve. Um, so what is higher lows like? That'll be weird. And I just that's what the dollar screams. The dollar screams not only from like a total financial system perspective, because the dollar needs to go down so other countries continue to exist. Isn't that crazy? Literally, it has to go down in value. Otherwise, other countries just are not going to be functional economies. They won't exist. It'll be anarchy and chaos. But the dollar has to come down for the reasons J.D. Vance, our incoming vice president, literally has said to Jerome Powell, chairman of the Federal Reserve. The dollar has to come down because if you want to manufacture in the US, the dollar has to be cheaper. When the dollar's strong, nobody wants to build here. They want to give it to
Mm.
Vietnam to build and for 90% cheaper, and then you sell it here for a 10x, a 10 bagger. So, but when the dollar becomes cheaper, now all of a sudden the rest of the world has a stronger currency, and they want to buy shit that we make here. So that's the relationship between the value of currency. But here's the kicker, and this is where Brent Johnson will be like, yeah, that's just kicking the can. Because a weaker dollar, you drive the dollar down to like 80 and 70 or something like that over the next 10, 15 years. That's going to drive a huge amount of dollar debt around the world. And that's just further, that just means this thing goes higher further in the end. The end state doesn't change, the destination doesn't change. The path can change. And this whole system is collusion. It's based on the relationship between central banks that are collectively deciding based on military power, based on arrangements and deals, like what's going to play out, who's going to be in charge, who's going to have the strength going forward as a country. It's just, I expect a weaker dollar over the next 15 years, just from a technical standpoint. And that's not even from like a JD Vance repatriation of supply chain and deglobalization, Peter Zeihan standpoint.
And what does that mean? What does that mean for Bitcoin?
Up and to the right. So here's the thing. Tech will outperform Bitcoin.
Yes.
So I've learned a lot over the last years of my own capital management. And you always got to learn from hindsight. I should have Bitcoin rotation first. Was this Ben Cohen? I
Mm.
think we all should learn from that. In my opinion, 2 cents on capital management. This is exit liquidity season. You should own the things you should own. You shouldn't be buying things on the way up unless it's temporary, transitory from a capital gains perspective. The whole point between now and next year is to stack the fattest bag of cash you have that you can. And when Bitcoin crashes to whatever the hell you think bottom is, let's say 60 to 80 or 90, and the whole world is coming to an end, just buy Bitcoin. And then about a year or two later, after fintech bottoms, which probably will be expressed in terms of interest rate policy of central banks, and you'll see that in the bond market as to a degree in the Fed balance sheet, then you get to deploy that capital because fintech will outperform. Fintech outperforms Bitcoin significantly always, but Bitcoin's the money, so that's your savings, and that's the cash position. The cash position is Bitcoin and stablecoins. Because you can spend stablecoins, you're not spending the Bitcoin, and you can borrow against your Bitcoin. So it's like working capital. The thing that folks don't understand about Michael Saylor, oh, it's just Bitcoin, 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 Bitcoin. The guy has the most incredible source of cash flow. Cash flow. One, he has an actual business that generates a huge amount of cash flow. And two, he has access to debt
Mm.
markets, which is cash flow. So that's what fintech is from a crypto perspective. It's our tiny person's capacity to build that business, that cash flow part of what we need as our individual balance sheets.
What could possibly go wrong from a Bitcoin perspective, or can nothing go wrong?
Well, the biggest thing that could go wrong is that people start paying back their debts around the world, which is which is impossible, by the way. So because they can.
Yes, that is ultimately the only thing that can go wrong. I mean, the network goes down for whatever reason, but that's also highly improbable. In fact, it's probably impossible, irrespective of whether we identify some kind of centralization in the network. Here's a question for you. In 2034, 99% of the Bitcoin will have been mined. The remainder of the 1% will be mined in 100 years post 2034. One of the big kind of like discussions that have come into the mix is what will incentivize miners to continue is obviously price go up. That's probably the most obvious. But in the event that it becomes unsustainable to mine, where do you believe miners will find their place in this world? I have some ideas on what that looks like, but I'm just curious as to whether you've thought about that element or that equation.
Well, you're talking about end state for Bitcoin. The 2034
Pretty
plus,
much. I mean,
yeah, between
yeah,
was it 2134? Is that the end
that's
year?
when it
Might be.
finishes. Yeah, yeah,
So that's a different end state. We can neglect that end state because we're all dead. So
yeah.
there's the super geek super nerds could contemplate the end state for the next generation to finish up. But for most of us, we could neglect that type of consideration. So there's a couple of takeaways for Bitcoin between now and 2134. One, Bitcoin's inflationary. I absolutely
Mm.
can't stand that deflationary narrative. It's just every day there is more and more
It doesn't
Bitcoin in
exist.
existence.
Yeah.
And I don't care if there's
Yeah.
Bitcoin that's lost. That's not the point. There's literally Bitcoin being created by the
Yeah.
network, and that pays the miners. So that's just
Mm.
it's a semantic. It's a technicality that's just important to accept and understand. Just don't so we're not lying to ourselves here. Yes, obviously, if there's more demand than supply, it's net deflationary on liquidity. That's irrespective of the fact that there's new Bitcoin being added to the system on a daily basis, block by block. Okay, maybe that's just me being a stickler for a technicality, but I think that's important. Um,
Agreed.
Between now and 2034, well, number go up, pays miners. Clearly, transaction fees pays miners. Um, there's uncertainty and unknowns. Like clearly, if you have large amount of financial activity, was it BitOS? Great. There's your fintech that's creating transaction fees that pays miners. I think in the short term, there's overwhelmingly a capacity to pay miners, especially as just the price goes up. So, time horizon. We have a clear horizon of probably at least for a decade. I mean, post like as it's literally what Raul
Okay.
talks about. It's post 2030. I had no idea what's coming out. I mean, you could literally start
Mm.
having, AI agents just running everything financially, and it's just all these transaction fees everywhere. So it could just everything changes. We have no horizon post 2030. So post 2034, certainly no horizon. We have to reassess everything post 2030, especially post AGI. That's we got to leave it at that.
So how's this for an idea? And I think obviously quite a sobering amount of variables to consider in light of what is kind of like on the horizon post even 2034. So let's stretch it by 4 years. I think the way that this thing plays out is that irrespective of whether AI agents are inserted to do all these things, which I'm pretty sure they will. Already we're seeing it, and as much as it terrifies me, I'm also fascinated and love it in many ways. I think one of the most interesting aspects of Bitcoin for me is that it is the most secure and the most widespread network that we've ever created from a security perspective. Now, that hash rate has value, and the value resides obviously in the power that it derives itself from, and then the power that it imparts. And then, secondly, that network effect has value beyond just mining Bitcoin. And this is what's interesting about it, I think, to kind of complete the story is like we have DeFi, we have proof of work, we have hash power that can be used to secure a network. And guess what? We also have proof of stake. Proof of stake and proof of work combined in what these Bitcoin L2s are doing right now, I think is very much a glimpse into that time horizon post 2034, where miners are then rewarded beyond just Bitcoin, but they are
Oh,
rewarded through this financial system that ties in everything from A all the way through to B to Z, and you have the sustainable ecosystem that supports miners so that they can continue buying the equipment that's needed, increase the hash rate that's needed to secure these networks, and for finance to actually advance and to progress, irrespective of whether AI is involved, humans are involved, efficiency, deficiency, and all of the above.
I think you nailed it. That's one word, subsidy. So you have
100%.
yeah.
And sustainability within the confines of this incredible network that I mean, Saylor has never stopped talking about it, and every time he talks about it, it blows my mind. Is that it's
You see,
like he's so right. It's like fucking insane, you know?
what folks don't get, folks are so myopic. Saylor understands the EVM maybe better than anyone. He just also
Yes.
understands that he doesn't need to care. At his size,
Mm,
all he needs is to do exactly what so that's the most important thing in capital management. You need to know what is working for you, just keep
mm,
doing it. He has no need
yeah.
to talk about fintech. But he damn well knows that you need credit systems to have a functional financial system. But he's not going to market that. There's no point. That's off brand. So, it's like what Chamath mentioned something like, as you get richer, and Musk liked it, as you get richer, all you have to do is focus on capital gains. No, 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 no. That's not investable. Nobody invests in capital gains. You're gambling on capital gains. You invest because you expect a return, a capital return, which is another interesting thing from a tax policy standpoint. Capital returns versus capital gains versus income. Semantics are very interesting. Anyway, so point is, Sarah definitely understands this stuff, and he has no need to deviate from his path. Dominates Bitcoin. That's insane to dominate a system
I
like
mean,
that.
dude, he's proposed a $42 billion purchase of Bitcoin over the next 3 years. Bitcoin continues to go up in price. He's going to probably quadruple that value in terms
Yeah,
of what he had projected in doing,
and not only does he
and
have his
it's like,
Bitcoin, he just has his equity. I mean, literally, he has no need to collateralize his Bitcoin because he's just collateralizing the damn equity, which just
exactly,
goes up.
yeah,
He operates by a different rule book than anyone that thinks they
yeah,
understand Bitcoin. Because it's just like everyone's arguing, how do you collateralize Bitcoin without giving up your keys, the private key for a UTXO in some way, shape, or form? And that's not so easy. Um, so the best, in my opinion, where the future is like a TBTC, where you're giving up the private key to a UTXO and it's MPC stored by immutable deterministic contracts. So there's no humans involved. So for Saylor, though, I don't think he has to even contemplate that because he has a damn derivative. Makes a derivative of Bitcoin in house. We can't do that. So he plays by a completely different rule book than all of us. So people you can't look to him and be like, I just got to stack Bitcoin. I think stacking Bitcoin alone is a detriment to a person's financial well-being. And I don't think people could reach their financial expectations in most part just by accumulating Bitcoin. Sure, you can do that by working because that's your cash flow, but that in itself is not consistent with people's financial expectations. People want to work less or stop working at some point and actually retire. So how do you replace work? You gotta buy a salary.
So we've done full circle on this. Full circle being, for those of you who are still with us after the 56 minutes of this this pod, is that use the capital that you have today in order to secure a salary for tomorrow. What that looks like has many forms, has many shapes, whether it's a yield bearing asset, whether you collateralize Bitcoin in order to earn yield, whether you've got Ethereum that is earning yield and fees for you. It doesn't matter what that looks like. But we have the financial instruments, even property, even hard assets like property with tenancy. Some would argue is not a good idea, but let's just pretend that it is. That is money that you earn when you are sleeping. That is the key to the whole point of the exercise. This is why we're here. We want to take care of our families. We want to take care of our well-being, and we want to have income when we don't want to work or when we decide that we don't want to work. That's the key, right? I mean, that is for me, anyways. I don't know about you. I think you would agree with that. Um, Fancy cars and the rest of it are nice, but they're not essential. That salary is, so that you can live, so that you can do the fun things, and that you can look after your family and give them the opportunities that maybe you didn't have.
Of course. Yeah,
On that, on that note, we're going to end it here. But great to make sense of it all. I don't speak to you enough, and when I do, I enjoy it very much because it kind of like all kind of comes together. Even though things are going to get weird, for those of you who don't know, when Noah refers to things getting weird, it means that we're going to make money and we're going to make lots of it.
Pretty much. Pretty much. Soon. I mean,
Thanks,
literally,
Noah. You're a freaking legend.
it's a pleasure. It's
You're a
always a
legend,
pleasure.
dude.
Now, look
Yeah,
what
I
you built. You
love
built
the thoughts. Go for it.
you built a heck of an empire yourself, my friend. It's legendary.
We're just having fun, dude. Like,
Yeah, but it's legendary.
we're just
It's
having fun,
renowned.
and
Who are we?
thank
I
you.
say that. Ask that. Everyone should ask that. Everyone listening, for yourself as well. Who are we? Who are
Yeah.
we? And all we are is our words, our stories, storytellers. That's literally what you built. This storytelling, and however successful the business is irrespective of the fact that it's still storytelling, and that's something that's meaningful because stories last forever.
Yeah, and I think it also comes with a responsibility of being honest and true to the story. I mean, maybe we don't get it right, but in the process, we're truthful and we're honorable as best as we can be, you know. And I think that's been the best part about it, is that this is who we are and we're having fun, and we also feel like we have a job to do, and that's to be truthful and honest about what people are doing, and that's been really cool. It's been a lot of fun, and I hope it continues. And long may we still be here to have these conversations and be who we are.
Yes, indeed. Cheers to that.
Cool. Thank you, sir, and thanks to all of you for joining us. I hope you made it this far. I hope it was interesting enough to join us on this kind of like mental gymnastics, but also making sense of what's going on. I think we have a lot of cool things to look forward to. We've got this insane bull market that's so unpredictable, but things seem to be going up. So yeah, let's enjoy it whilst it's here. And yeah, like and subscribe. Thanks for joining us. We'll see you guys on the next episode of A Blockmates Orange. Take it easy.
Next time. Bye, guys.
Quick one, nothing here is financial advice. It's for entertainment and educational purposes only. Always do your own research or speak to a financial advisor before making any investment decisions. Like and subscribe.